Hi everybody, I'm Brittany Lewis with Forbes Breaking News. Joining me now is Shavel, CEO of Verisk. Lee, thanks for coming on in.
Brittany, thank you for having me. It's a real delight to be here.
Before we dive into the conversation, can you just give us an overview of what is Verisk?
Sure. So Verisk is a data and analytics company that comes from an interesting background. It used to be a utility that was owned by the property and casualty insurance industry. And we collected statutory reports, regulatory financials, and reported those to the state regulators. The insurance industry is a state-regulated industry. And in the 1970s, when we began that activity, we also began collecting data on behalf of the industry. We were the first in the industry to get mainframe computers to collect and analyze that data, share it with the industry, and fulfilled that utility function where we were able to invest on behalf of the industry in helping them make better underwriting decisions, improving their claims process, and understanding the risks that they face. And in a lot of ways, that's still what we do today. Although data sets have expanded dramatically, technology has improved and changed in a lot of ways. And so we are investing in new data sets, in new technologies to help the industry better perform the functions that they do to provide resilience globally. And we are now independent and separate from the insurance industry.
I do want to talk about some risks that businesses are facing. Right now, extreme weather events, we have seen many over the course of the past year, starting with wildfires in Hawaii, the hottest July on record, an active hurricane season, and even just a few weeks ago, a flash flooding incident that devastated both the northern New Jersey area as well as the New York City region. So how does this impact insurance?
So the most immediate effect is that it has clearly increased losses for the industry. And it has done so at a level of increase from a loss perspective where it has challenged the profitability of the overall industry. In 2022, last year, the industry reported underwriting losses of $26.9 billion. And so far this year, the losses just for the first half of 2023 is approximately $24.5 billion. Now, if the industry isn't able to profitably underwrite business, then they are going to be less able to absorb those risks and write additional business on an ongoing basis. So those increased weather events are generating higher losses, but it's important to note that it's not just the increased number of events, but we have greater exposures. We have large numbers of individuals that are moving to states like Florida and building homes or other buildings in a high-risk area that's going to be subject to greater hurricane risk. And so the overall exposure is growing. And of course, you also understand that inflation has been an impact on materials costs and labor costs, which are contributing to those larger losses. But as you state, the higher number of weather events are driving larger losses for the industry, and they have faced constraints in how they can increase their rates from a regulatory approval standpoint, which is compounding the problem.
I do want to talk about inflation in just a moment, but something that I wrote down that you just said, it challenges the profitability of the industry. That doesn't sound good, so how do they switch the tide here?
Yeah. So there are a couple of ways that the industry is working to adjust to this environment. The one that I think has gotten a lot of press recently is that in many cases they have decided that they are going to be unable to write new business in states where they feel as though the rates that are available to them don't adequately compensate them for the risk. And so it's a simple portfolio decision that they have to make where if they can't generate profits or they're exposed to greater losses, they have to exit those. The other thing that they're doing is I think they're working with the regulators, with the state governments, to help them understand the increased risks that they're facing from inflation and from weather. It's been interesting that up until recently, certain states have not allowed insurers to use forward-looking models to estimate what their costs are going to be. That's a challenge when all you can look at is your rearview mirror to determine what the potential losses are, particularly when you're facing future increases, whether it's weather or inflation as a result. The second, the other area that I think they're using to address these is more analytics and more technology to try to operate at a lower cost and automate more functions so that they can be more efficient in serving the policyholders that are their clients.
You actually wrote an article for Forbes about this weather events earlier this year, and I want to know a little bit more about that. It was entitled this: Natural Catastrophes Become the Largest Driver of Corporate Insurance Losses in the U.S. This was written at the beginning of 2023. One, is it still true? And two, why is that?
Certainly. Brittany, it's interesting that we wrote that at the beginning of 2023, and something that has been remarkable so far this year is that severe thunderstorms, or what in the industry are called convective storms, have contributed over 70% of industry losses this year. We've had over 8 $1 billion events that have occurred.
Thunderstorms?
Thunderstorms have generated the highest level of loss. Now, we're used to thinking about what would be known in the industry as primary losses of hurricanes and earthquakes that have massive impacts. But we're now seeing that thunderstorms and wildfires, flooding, as we were talking about earlier in a variety of areas, are now accumulating to be much more significant losses for the industry. Now, we certainly believe that is a function of that increased exposure, the inflationary impact, but we also believe that the observational data corroborates the scientific data around climate impacts, where a warming environment, particularly warming sea levels and higher levels of overall higher levels of sea levels, are contributing to both more frequent storms and more severe storms that are affecting and challenging cities' ability to absorb that amount of rainfall and wind levels within the United States and more globally.
So, because this will be happening much more frequently, what is your advice to both businesses and people to mitigate these losses?
So, one area that we have been spending a lot of time working on is beyond modeling the severe weather events as we do for insurers and reinsurers. We have been working through our remediation consulting practice to help corporations, governments, communities understand the risks that they face, utilizing the models that we have so that they can explore and evaluate remediation techniques that allow them to address these issues before they become severe problems. And in certain cases where commercial insurance may not be available because of the level of risk, finding ways to creatively finance protection for those communities where possible. But Brittany, it's a big problem, and it's not one that communities on their own can solve. It's not one that the insurance industry on its own can fully address, but we need a partnership between government, communities, and the industry and the corporate world to try to identify and think long term about what are the consequences that we're facing and how do we put in place infrastructure and protections to mitigate many of those losses and risks.
Where are we when it comes to this partnership? Beginning phases, middle phases, perhaps is it coming together soon? What does that look like?
So right now, it feels to me as though it's at a very early stage. There are, and if I were to contrast where I think we are from a government standpoint relative to the insurance industry, I think the government is generally speaking, still debating the impact of climate change. The weather events that we've experienced I think, have forced them to recognize that this is a very real issue. It's a very real political issue. It's a very real economic issue. And we're beginning to see more action taken on the part of state governments to recognize, as I indicated before, California has decided to make some changes in their insurance regulations to recognize that that insurers should be allowed to use forward-looking models in evaluating the risks. But the steps that are going to be necessary are going to require long-term planning and engineering solutions and mitigation strategies that will be complex and will require a lot more coordination and funding than they have currently.
I do want to pivot to an economic concern you've brought up a few times in this conversation, and that's inflation. We've seen stubborn inflation for the past year and a half, so how are higher prices impacting insurance?
So most directly, simply the increase in the costs of lumber to repair buildings, the cost of labor, and other costs involved in replacing these buildings has a direct impact. In the automobile industry, we are finding that because there's a lot more technology in cars today, that it's more costly to replace those components. Now, another related factor is that because of the volume of incidents that we've been experiencing, the demand surge for certain products and labor needs is also adding costs to what's necessary to repair and mitigate that. So all of those have a direct impact on the costs for the insurer. We track, as one of our businesses, local materials costs and local labor costs across a wide range of functions that are necessary to repair and remediate damaged properties. And you can see these surges in demand impacting prices. That's the immediate effect, but also recognizing that inflation is a compounding element. A 4% increase annually in replacement costs over 10 years can contribute to a 50% overall increase in the cost of that repair.
When you're looking at these two factors, extreme weather as well as economic concerns like inflation, what do you think the bigger risk is? Because you said extreme weather is going to happen with more frequency, but we do know inflation does tend to come down. So when you're looking at this, what's the bigger risk?
I think that you have to look at the weather event as the primary cause. And so if we have more thunderstorms, more hurricanes, and particularly as we look at Hurricane Ian in 2022, which was the largest hurricane impact since Katrina, we saw a much larger, slower moving storm that dumped a lot of water and created a lot of flooding damage. So I think you have to start there. But inflation will, if sustained for a long period of time, will magnify that cost. Now I'm going to add another element to what you've described. The other thing that we are looking for, certainly in the U.S., but also on a more global basis, is how political risk and social risk can magnify the risks of a disaster. And an example that I'll use is in Turkey, we had a series of earthquakes. In a region where you may have political risk, you also have a higher risk of corruption. And that sometimes translates into not maintaining building codes to the levels that are necessary in order to protect a building in the event of an earthquake. And so one thing that we are looking at beyond the economic impact and the climate or weather impact, but also the impact of social and political risk and how that can magnify things. That also, I think, is a relevant concern for a lot of corporate leaders, that they understand in the locations that they are operating in, how could that affect their operations, their resilience in responding to a major weather event, and could it expand and become a very dangerous place for their employees?
That's really interesting and a point that I didn't even think of, much like the thunderstorm situation you talked about earlier. So how do you protect your business from political and social risks?
So the easiest answer is you decide where you want to be doing business, and if you are doing business in a high risk area, then you need to think about what mitigating controls, what protections do you put in place in order to limit your exposure, and making certain that you have a redundant systems to be able to deliver your product or to sustain your business in times of challenge. One thing that is interesting to me about the perception of risk is a lot of work has been done about our own bias towards large, extreme, severe risks, which we tend to overvalue. We're all, of course, concerned about terrorism in our world, and we know that that's a risk. But it was fascinating to me to learn that a different category of risk that insurers are exposed to, one that's called strikes, riot, and civil commotion risk, or SRCC risk, in 2022 was substantially larger in the losses that it generated relative to terrorism risks. And the reason I mention it is that for a company that is operating in an environment that has a higher perceived level of social risk or political risk, they need to understand what could be disruptive to their overall business model. These are risks that we track on a global basis and on a geospatial basis to help insurance companies understand their portfolios and also how corporations should be evaluating their level of risk to inform their mitigation and resilience strategies.
Are companies thinking about this right now? Because I would think of the usual, hey, if you build your business in Tornado Alley, you should prepare for that, insure that way. But political and social risks, that's not at the top of mind for me. Granted, I'm not a business owner, but are business owners thinking this way?
I think increasingly so. And I can put myself in the shoes of a leader of a public company, and I have to think about and have experienced within our company threats that we have been exposed to from a political risk standpoint or in a social risk perspective, where we have made adjustments in how we're operating and where we're operating in order to mitigate those. A dimension of this that you'll hear a lot about in the insurance industry is cyber risk. And so cyber risk can be viewed as having an element of political or social risk associated with it. And what we have found is that there are clearly scenarios that could generate substantial losses for the U.S. or for the global economic environment that could exceed over $1 trillion, which could certainly put a big dent in the overall insurance industry's surplus. These are risks that really require, again, great partnership between corporations that are exposed to them, as well as government support in order to provide early warning systems and mitigation strategies to address them. But certainly cyber risk is probably on the minds of the vast majority of corporate leaders that I speak to.
When it comes to these factors paired with insurance, what do you think is missing from the national conversation here?
Brittany, I think the insurance industry is a very important one for the economy, for communities, and for individuals. It provides peace of mind for folks for bad things that can happen. It's critical to businesses being able to undertake commercial risks that they do on a day-to-day basis. The foundation of our modern insurance industry was a commercial application to ensure shipping. So it really is central. It is also something that is a quintessentially human endeavor in the sense that we all recognize that we're going to face individual risk, and we agree that if something bad happens to any one of us, we're all going to share in that risk rather than having an individual basis. That at the core is the insurance equation that has worked for literally millennia. What I think is missing is an appreciation of the importance of the industry and of the financial reality that insurers face in making certain that they can generate a profit so that they have the financial assets, the capital, and the necessary surplus to cover those risks and to find ways to cover additional risks like cyber risk, which is an emerging one, or other elements of risk that we're facing that are driven by climate change. I think that a lot of our perception of insurance is the experience of buying insurance and seeing our rates go up, and to appreciate what the insurance industry can do to help us economically and socially. I think it requires a more open understanding of the market and the business that they have to operate in. And I think the government and the regulators are beginning to understand that better. And I think it would be very helpful if business leaders and other individuals recognize the importance that it plays.
We're seeing cyber, economic, weather, political risks all evolving. So what does the future of insurance really look like?
Insurance is evolving at a very rapid pace. And for me, it's exciting to be in a position where we can make investments in new technology and new data sets that helps the industry become more effective at underwriting risk, more efficient in how they operate their underwriting or their claims elements, in modeling storms and broader weather events and understanding the impact of climate change. So there's a tremendous opportunity for the industry to move forward. The challenges that they face are the financial challenges that we've just talked about for some time, the regulatory challenges, but they also face a technological challenge in the fact that a lot of their legacy systems were designed decades ago, and it is very costly to upgrade those and to make them more effective and more efficient in managing the volumes of data that is available to them now. I think the best insurance companies have been at the forefront of improving and investing and updating their systems to be able to do that. But there are a large number that don't have as much capacity to do so. A lot of what we have been effective in is delivering substantially greater economic value from technology investment by doing it on behalf of the industry than the individual insurance companies doing it on their own. A perfect example of that is there's been a lot of focus on generative AI recently. And I recently had dinner with the CEO of a major insurance company, and he said, Lee, look, I think generative AI could be really powerful in helping us pull together data sets and supporting our underwriters in evaluating a risk and bringing in additional dimensions. And I know that I could spend tens of millions of dollars developing this, but if you and Verisk are able to make that investment and deliver something that the entire industry can use, to me, that's the perfect example of where we can utilize your scale, your centrality in the industry to create value. So that hopefully answers your question in terms of what the challenges are that the industry faces, and also the value of what we strive to do to help the industry, if that was clear.
Lee Shavel, thank you so much for the conversation and your insights.
Thank you very much, Brittany. Pleasure talking to you.